Back to the Lending Technology Think Tank. My name's Colin White. I'm from Credit Connect Media. For those of you who hadn't tuned into our earlier sessions, missed a couple of really interesting sessions on affordability and risk. For those of you who haven't never joined us before, welcome. There is some interactive elements to this webinar. So if you want to get involved with that, then have a look at the screen in front of you. On the left-hand side, there's a speech bubble. Feel free to ask questions throughout this session if you've got any burning questions you want our panel to answer. And also have a look at all the links and different icons that you've got on there. It's got speaker profiles, etc. We'd love for you to be part of that. Socials-wise as well, if you want to comment on the event, Twitter and LinkedIn, use the hashtag LendTechTT. But yeah, now we want to move on swiftly to our third session of the day, which is looking at digital lending. And we've got a really good panel lined up for you for this one. So without further ado, I'll hand back to our chair for the day, Chris Warburton from our strategy, and he will introduce our panel and get the conversation going. And we'll go from there. So Chris, over to you.
Thanks, Colin. Appreciate it. So yeah, just for those of you who went on the previous sessions, my name's Chris Warburton. I'm going to be the chair for this session for the Lending Technology Think Tank. With Credit Connect. A little bit of my background. So, I spent the last sort of over 20 years, I suppose now, in risk operations, looking at process transformation, largely from everything from acquisition through to credit and collections at the back end. I'm currently director for RO strategy, and we've been spending the last couple of years doing a series of sort of like exploring innovation and new techniques and new processes in the collections world through a series of videos, really. So delighted to be able to chair this event today. So this event here is around digital lending, and I suppose just to start off, I mean, we've seen digital and digital lending, I suppose, sort of develop with leaps and bounds over the last couple of years, really driven, I suppose, to largely extent by the pandemic, which seemed like a bit of a sea change in terms of sort of adoption. But as we enter this sort of like a new normal, and I sort of say that with almost like with brackets around it, because whether it's actually normal or not, we'll see. We've got economic clouds on the horizon. We've got we've got energy price increases. But as we reach this new normal, I suppose I want to ask the question in this session, right? Have we reached peak digital? Is there more that we can do? Is there not more that we can do? How should we think about what the role is for digital going forward? And do we even need to think about it slightly differently? So with me today, we've got a great panel. We've got Louise, Allemagne, who's a compliance manager for interim registration from the Lending Standards Boards. Louise is on the phone today. So we're going to come to you, Louise, and just do a bit of an introduction in a minute. We've got Michaal, Allison, who's the operations director for Roma Finance. Hi, Michaal. And we've got Gilad, Amir, who's the digital operating partner for Pollen Capital. And we've got Dalglish, who's the chief commercial officer for Jaja Finance. So thanks very much for joining me today. What I'm going to do is maybe just ask you to just give a very brief introduction about yourself and also maybe the company that you work for. And Gilad, you're first on my screen. Do you want to maybe just start?
Yeah, sure. Hi, everybody. Gilad, Amir, Pollen Capital. We are an alternative asset manager that specializes in financial services, active through our private equity fund and the credit fund. In the private equity fund, we invest very actively in all the different subsectors. Between the credit fund and the private equity fund, we lend directly or indirectly to most asset classes and credit products that exist in the UK and European market. So we have the privilege to do a lot of work in the space, obviously transformation and digital transformation, data automation, analytics, and so on and so forth. I would say our bread and butter in terms of the area of focus and where we can create value in our portfolio.
Fabulous. Thank you very much. Lucas.
Hi, everyone. Yes, Lucas Dalglish, Chief Commercial Officer at Jaja. Jaja is a UK digital lender. We've recently raised over £120 million of investment and secured a sizable lending facility, which in the current climate, as I'm sure has been discussion over the last few sessions, we're very pleased about. We provide credit cards to the UK. We do that through co-brands and our own brand. And we're very focused on the recent launch of the Asda credit card, which we when we went live with a couple of weeks ago, and it's going really well. So yeah, we're onwards and upwards. Myself, I've got a lot of experience in financial services, running P&L lines across current accounts, savings, credit cards, but also leading and taking businesses through big transformation projects. And again, a lot of the topics today, things like delivering things like open banking, PSD2, some of those foundational elements has been my bread and butter over the last couple of years.
Okay, fabulous. Michaal.
Good afternoon. Good morning. In fact, I think we just tipped into afternoon.
Yeah,
so
just
bit early there. Yeah, so I'm Michaal Allison. I'm the operations director for Roma Finance. A quick bit about myself and my role. So I've been with Roma now for about 18 months. Ultimately, the operations director, it's from the point of application all the way through to the point of redemption and assisting those customers and colleagues throughout that life cycle in between, whilst also looking at operational improvements through either process enhancements or more specifically, a bit like Lucas, looking at how technology can assist us in our scalable journey for customers. A bit about Roma, we deal in the unregulated space in property investment, basically. That's across bridging finance, all the way up to ground up development from auction purchases, whatever it may be, and also buy to let as well. We offer a mid-term buy to let product. And what we try to do more and more of is help customers to grow their portfolios as they look to obtain property and invest through property. We're on a scalable growth program, a bit like everybody else, but at the same time, we're really conscious about how the economic climate is affecting customers at this moment in time.
Fabulous. And lastly, Louise, a quick introduction around what you do and your role.
Yeah, hi everyone, and apologies that my camera isn't working today. I'm having some technical issues, but it's still great to join everyone. So I'm Louise, and I work as a compliance manager at the Lending Standards Board. For those of you who don't know us, the LSB are the primary self-regulatory body for the banking and lending industry, and we have a very clear goal, which is to drive fair outcomes for both personal and business customers within financial services. The way we do that is by having independent oversight of various standards and codes that we set and are responsible for. They include the standards of lending practice for personal customers, business customers, which are those standards are FCA recognised. We also have standards of lending practice for asset finance, and we look after something known as the CRM code, the Contingent Reimbursement Model Code, which protects customers from authorised push payment scams. That's the LSB. And my role at the organisation very much involves working with non-registered firms who are seeking registration to the LSB, helping them to understand the purpose and scope of our standards and if they would be suitable for registration. I've personally always worked in a very customer-facing role, and prior to joining the LSB, I worked for a specialist commercial lender and then in a debt purchasing industry, both of which really helped me understand the challenges, I guess, that firms can face in trying to achieve good outcomes and meet their strategic goals. But it also taught me a lot about how that can be done with the right approach. And so I'm very much looking forward to joining this panel today. Thank you.
Thanks very much, Louise. Appreciate it. So I started off by talking about digital lending, and I made this sort of like statement around like, have we reached peak digital? So we've heard a lot about digital. Is it done? And now we're going to have to introduce manual processes. And Gilad, you're nodding there, and I think you're going to disagree with me. But I was going to go to you first in terms of what do you think? Have we reached peak digital? Is digital done?
Well, I think we have hardly scratched the surface, so we are just starting. But yeah, you could see it coming, right? Yeah. So I think that during the pandemic, the industry started to adopt technology to an extent. I think most lenders that I see are still playing around the edges. So they managed to automate some of the front end, so create maybe smarter or more elegant customer journeys at the front just to try and capture the data. And some of them managed to automate the simpler scenarios of auto decisioning, the auto yes, auto no. But when it comes down to processing referrals, and certainly for the more complex credit products, and make better use of data. Most lenders are still using the same techniques, same methods, same everything basically that they've been doing since the 17th century. So it's basically the same industry. Obviously, there are exceptions, right? But yeah, I think that now we start to see increasing pressure on CROs and chief underwriters and chief compliance officers to adopt technology, to adopt automation, to make much better use of data analytics, to automate the real engines at the back. Okay, yeah, but there is still a very long way to go.
I mean, Lucas is going to come to you next, just since obviously it's a relatively new firm. I mean, what's I mean, you've got a more of a greenfield site to sort of build some of these things. I mean, what's your kind of view on it?
Yeah, I think I mean, what I would say about digital innovation is that for consumers, it's been amazing over the last couple of years. Lots of investment from VCP, and that's allowed the likes of Starling, Monzo, if you look outside of lenders, to reset table stake standards. And I think that's, when we come into it, we look at those sorts of suppliers as our benchmark, and that's what digital sort of native customers have come to expect. So I think there has been a resetting in terms of some of those experiences. But as Gilad said, a lot of credit decisioning is still using very traditional methods. And so I think how you use credit scoring and what you see is the slow and steady integration of open banking data into some of that decisioning. People are being rightly cautious and often running it in parallel, but you're starting to see people break out. That undoubtedly will become a new normal in terms of how that's sort of integrated into overall decisioning.
Yeah. I mean, Michaal, you've got a bit more of an ops kind of lens on it as well, which is, and obviously it can be a bit of a struggle to put some of these things in sometimes in terms of like, transforming processes and those kind of things. I mean, what's your kind of view on the state of digital in the kind of the market?
I think it's the struggle for authenticity. Each lender has their own brand and they have their own approach. And I think if we follow, we follow digital, it's making sure that the human touch still adds that value. When there is the call out for such a referral, for instance, or wherever it may be, I think there's two journeys we're going on with digital. There's the customer journey, which is obviously key to attract, the newer customer base, etc. But also it's the colleague journey. We've got to bear in mind is that as we continue to change our technology, you're taking that, I think Gilad said there is 17th century or whatever it was, processes, but you're taking things that people have done for a long period of time and changing that. And it's how do you keep that essence of what remains the business to be authentic in when you do speak to a customer? We do speak to them on the telephone sometimes. How do we project the same image that we project digitally? So I think when it comes to digital, as a lender such as ourselves, we find it the difficult bit is harnessing the authenticity. How do you project the right message and how do you bring the people in at the right time and keep them engaged as well on your communication?
I mean, certainly on some of the previous conversations we had around, we're talking about financial affordability, financial vulnerability, and vulnerability. And there's discussion around, well, we still need to have humans involved for some of that. I was going to bring Louise in maybe just on this piece here from an LSP point of view in terms of like what your views been, particularly when you look at things like consumer duty coming through, and it feels like there's sort of like a bit of a change to say, well, look, you've got to have people involved at some point. I suppose it's just kind of like where do we draw that kind of point?
Yeah, I think that's a really interesting point, and I liked what Michaal said there around the need for human interaction. For me, I don't think digital has peaked, but I think there is a competing need to meet the needs of all borrowers and to be inclusive. So we know that some customers love digital services. We know some customers feel more fearful of it. You might even have customers who like that, but at times want and need to speak to a human being or to interact with a human being. And so I think there's a competing priority really within the industry, like Michaal said, to have those digital services which can offer so much speed and flexibility, but also to make sure that lenders really understand the needs of all of their customers and they're meeting all of those needs. So they're not leaving anyone behind, and they're not meeting the majority of customer needs, but they're being inclusive to all of the different types of customers that they have.
And I suppose, so in terms of like, I mean, going back to, I suppose, the implementation, right? So we can look at it, and Gilad, maybe go back to you in terms of, we can look at it in terms of like, well, we think everything to be digital versus, some of it is remaining as being manual. Is it more of a sense around like there's opportunities and we have to just keep through waves of opportunity to continue to improve things? I mean, what your view is, maybe we need to be 100% digital or nearly 100% digital. Like, how do we go after that opportunity? Where's the opportunity, the biggest opportunity that's still on the table for us to look at?
So look, being 100% digital doesn't mean that humans are not involved or won't be involved, right? But a data or a tech-augmented individual or human could offer a completely different level of service to customers than just a call center representative or an underwriter that is still using spreadsheets or is still receiving PDF by email, right? And so I think that in general, and now we see the transition to RPA 2.0. So we see the pressure to move to real automation. So basically to adopt end-to-end automation, and also to automate some of the corporate knowledge or corporate expertise, quote unquote, right? With basically the businesses like, again, if I can mention MindBridge and Luther, some of the vendors we are using and look at that can basically automate the next level of the corporate expertise, which means the non-linear decision trees with feedback loops, so the smartest stuff that can be automated. Because again, without obviously derogating or undermining the expertise of in some cases, but again, it ain't rocket science ultimately, right? So we can teach the machine to lend and to take decisions in 80-85% of the cases, right? That said, again, we cannot fully replace humans, so we still need humans in some cases, but we can augment them with much better insights, understandings, for example, about the next best conversation and about the next best product, and be more proactive. And again, if we think of personalization or hyper personalization, so there is no way to do it without data and without analytics, right? So to better understand the customer needs, better understand the trajectory of the customer for consumers, SMEs, corporate, and so on, right? In terms of the next opportunity, again, it goes back to automating the back office, in automating as much as possible end to end, and then using data analytics in a much better way at the back, right? I think that's definitely the next area of focus of the industry, if I can, speak on behalf of the industry.
So I mean, do we tend to think of it, or I mean, I'm doing it to a certain extent now, is in these simplistic terms of digital versus automation, right? And it's these simple sort of like, almost like, polar opposites, but in fact, it's a much more sort of like blended. You've got to think about like, how do you become integrated so it becomes a better process? I mean, I think that's kind of what you're saying. I mean, Lucas, I mean, would you kind of agree with that kind of statement, or how would you think about it?
Yeah, I mean, I'd just get back to the previous comment as well. Just so maybe think of it slightly supply and demand. So demand in terms of customers wanting personal conversations. I mean, what we see in data, and I'm sure everyone can recognize this, is you have customers that still want paper statements, they still want to speak to someone on the phone. But you look at their shopping and they shop through Amazon, they shop and they buy Netflix, they consume through Spotify, they consume digital services. So from our perspective, a huge bit when you dig into that is around confidence about financial education and understanding of finances. So some great stuff in the FCA, plain numbers in terms of research. 20 million of the UK have poor numeracy skills. 2/3 don't feel confident talking to their financial services provider about the products and services that they might need. So in that context, no wonder people are nervous to self-serve. So for me and Jaja, there's a lot around how you help customers and handhold them through. And just to pick up on what Gilad said, talking about those hyper experiences that are unique. I think that's one of the ways that you can leverage digital and data to help people in terms of sort of bridging some of those gaps. You can give unique one-to-one personal conversations, make interventions at the right time, make them timely, and that can really, you can see that really start to change people's behaviours and feel more confident. I think that is that is a big industry issue, and as you get things, there's things like open banking and all this data stuff becomes more prevalent. The risk is for us as an industry is that stuff gets more complicated. It is already really complicated. So how do you strip stuff back, explain it very sympathetically to a wide range of audiences? We lend to near prime customers, often the first time that they are doing lending. Taking them on these journeys is a huge part of what we need to do as an industry.
Yeah, so the process design still there. I think what you're raising is quite interesting in terms of and particularly when you get into investment cycles, right? So do you invest against where you think the consumer's going to be or where they are now? Because where they are now might still be wanting paper statements, but then we saw through the pandemic that that actually people adopted digital processes. But if you invested in paper statements now, then that's going to quickly fade. Whereas you should have invested maybe on the digital stuff in the future. Gilad, I'm sure you got some stuff to say on it, but I was going to ask Michaal, just from an ops point of view, around your kind of perspective on that, because we spend a lot of time sort of fixing the past, but how do we think about investing now?
It's interesting, isn't it? Because you've got to start to think is that the next wave of people coming through are more digitally savvy. So we will have, I think there's a definitive, going back to Luke's point, there is that definitive split with people who are happy to do finance digitally and those who aren't. And you have to embrace that, especially a lender such as ourselves. We have to be able to cater for both of those people. And it'd be naive of us to immediately go fully digital and cut off, alienate those customers as they come through. I think Gilad's point was really interesting and probably one that's quite thought-provoking. When a customer comes to you, digitally, we use all the tools to say, are they, is this a product of best fit? Is this right for them? We may have a conversation, but essentially your credit reference agency, land registry, whatever it is, we digitally consume a lot of information. Once they have the money, everything is then reactive. And I think the piece for digital and how do we get this, how can we get more proactivity that is less manual in the process? So back to that customer experience,
it's a good point, Michaal, and I think that if I may add something, I would say that portfolio management would probably be the next phase. So I think that as we see increasing pressure on underwriters and sellers, so I think that also in terms of the technologies we have been looking at and also building internally, portfolio management is definitely an area of focus. So ongoing monitoring. Much better use of data and insights to understand in almost real time what's happening with our portfolio and our borrowers, and be much more proactive about the way we engage with our customers.
A lot of that is still manual. Obviously, at the moment, our contact strategy is very manual, and I think what would be interesting is how we can embrace more digital to help us as the lender. The customer, once they have the finance, it's probably how the use of digital for them sort of goes away, doesn't it? Because for us, then we become a reactive or proactive lender, but it's always through communication. It's that ability for a customer to manage their own digital self post funding. I think that's the big trick, really.
And we're going to come on and talk a little bit about recency of data. I suppose we were talking about that at the start in terms of how quickly do we need to refresh it. But I suppose I just wanted to take a step back and sort of reflect on the cost of living crisis, or at least in terms of projected increases in terms of food costs, a day-to-day spend, and almost like that expense item on the affordability element, together with, I suppose, impending energy costs increase, subject to what happens this week. I mean, how do we need to start putting that into our processes and understanding that, and particularly that forward-looking view? Maybe Louise, just on the phone, I'll ask you to comment on that maybe first in terms of how we got to think about that and how do we need to react to that and build that into our lending processes.
Yeah, thank you. I think that's a really great question. The economic environment is so volatile, isn't it, and challenging for both customers and for lenders. how do you predict someone's income, say, in 6 months' time when energy prices have rise exponentially? How do you know what they can and can't afford? I think it goes back to what we were saying earlier about it's not about digital versus manual process. It's about using all of the information and tools that you have available to be able to get that holistic view of the customer's needs, be it before you lend money to them or once you've lent that money and they're potentially in financial difficulty. So my view would be digital can play a really important role in the cost of living crisis. I don't think it will replace the need for those human interactions, which we've touched upon, but it is a good time for lenders to look at the information they have available and how they can use that to help understand the impact that this crisis is having on their customers.
And do you think, just coming to recency of data, I mean, do you think there's this idea around like we're going to have to get into much more frequent refreshes to understand people's affordability situation at that point in time? And Gilad, to your point around portfolio management, like what is it now? I mean, digital offers a way surely for us to get the information refreshed on a much more frequent basis.
Yeah, I think.
Yeah. Oh. No, please.
Sorry. Did you want to go, Gilad?
No, please.
Go ahead, Louise.
Oh, thank you. I think that's the challenging question, isn't it? How often can you turn through that data and get more up-to-date information? But I think that goes back to the human interaction piece again. So our customers are often the person who can tell us exactly what's happening for them and what the impact is. So maybe it's a case of using the data that you have, but where you need more clarity, it's speaking to the customer. I mean, as I'm talking, I'm thinking about financial difficulty, for example. It can give you an indicator that someone could be struggling, or you might have a cohort of customers who might be hit by the cost of living crisis quite strongly, such as small business owners. And it's about taking those indicators of data, but it's what you do with them. So do you probe deeper with the customer? So I think it will be a blend of using that data, but also speaking to and working with customers.
Yeah, I mean, how much of the data? I'll ask Lucas and Gilad maybe to comment around how much of this extra data we need to go out and find to almost like to work out what future expenditure is going to be, or to maybe even create new segments to understand some of this stuff so we can have those conversations. In that idea of recency.
Yeah, so just to Louis' point, I think that, so I will understand what you're saying, Louis. I think that many times consumers and also SME owners, they don't know, or they just don't want to know, right? So we need to take it into account. And do we really need to speak with customers to understand their situation? Maybe, but in most cases, we don't really need to, right? If we make proper use of data, we can know better than the customer their real situation, right? In my opinion, right? The data is there just to make it the right use of it, right? And many times customers, they just don't know. Certainly SME owners, right? They're just running in the dark. In terms of data recency, Michaal, if you want to go, if you want to give a go. No,
I'm listening, Sam. Come on, you carry on.
So look, that three aspects to it, right? One is like, I would say, the defensive answer. It would be that, if you make it with better data recency and data is available, so certainly open banking, open ledger, company's house, credit bureau, and so on and so forth, right? And it's a very long list of data sources that one can use. The right use of data would allow to identify much earlier in the process issues or potential or evolving issues, and then proactively contact the customer and when needed take corrective actions, right? So it's much easier to fix a problem when it's small than basically move the customer to collection and recovery. And ultimately it will result in lower defaults and write-offs. Okay, it's as simple as that. There is obviously a regulatory aspect, right? If we think of Conc 7 and consumer duty and others, so lenders will need to be much more, I think, informed about what's happening with their customers throughout the life cycle of the customer in the loan life cycle, right? It's as simple as that. So there is no, we don't know, we didn't understand. You need to understand what's happening with the customer. It's as simple as that, right? And take the right actions as per those two, I think, regulatory frameworks that I mentioned. And on a more positive note, I think that if you better understand the customer, so you can also be more proactive about offering other products and services that the customer may benefit from, right? So it's
And I suppose you're raising an interesting point there, and I'm thinking about social media, where they seem to know me better than I know myself. As an example, we talked about that on one of the previous sessions, right? And mathematically they do, right? So, and I think in terms of outcomes that they probably do. And I suppose that there's a balance there between how much do we rely on the maths, which the numbers say probably are probably better descriptive of what the customer, whether they're in financial difficulty or whether they're vulnerability. I mean, the statistically they might be more descriptive, versus relying on what the customer says, right? Which may be less descriptive, but it's probably more defendable from a regulatory point of view. I mean, where do we sort of draw that balance? I mean, Lucas, maybe you comment on that in terms of like how you might think about it. But there is almost like a bit of a mismatch there between human interaction versus the maths and the science of it.
Yeah, sure. I mean, like whenever I sit and my boss gives me feedback, I'm like, I think I knew that. I just needed someone else to tell me. Yeah, that's human nature, isn't it? I mean, I think there's two bits, or two, maybe think of it two ways for me on this. One is there's this credit risk decision. So, and this concept, this is relatively new in terms of a regulatory requirement to assess affordability and look out to the future. You know, credit risk, understanding and pricing a consumer's risk, you know, in terms of previous performance, very well established, and yes, then open banking and having very recent data, that's really helpful. Affordability, you know, we would go back and we still look at macro trends, we still look at economic forecasts, you know, back to some of the fundamentals of lending, and we need to maintain those principles and make sure we're applying that against the data. So, you know, classic, if you've got a rising unemployment rate, that is the key factor. If you know that is on the way, would a consumer know that they're about to, you know, lose their jobs? Can you see that in the data? You can't. So you have to use other sources. So I think it's how you deploy the data and it's how you think about it, particularly in the light of where we are now in terms of a very dynamic or changing situation. So how do you rear view, mirror drive into the future? And so one of the ways that, for example, we would see ourselves as having an advantage over, say, some of the bigger incumbents is that we can react to what we see incredibly quickly. So something might be happening now. Lots of people might be able to see that data, but we can, because we're greenfield, set up for it and have those processes that you say, Gilad and Michaal, you know, digital processes. We can amend our processes and policies and decisioning very, very fast, effectively real time to respond to that. That's a competitive advantage in the current, you know, way that the marketplace is set up with incumbents, legacy systems, spaghetti junctions of manual processes, all of this sort of stuff. So yeah, I think it's again, you know, because we're all competing against each other, you know, there's a little bit of that as well. In terms
I mean, flexibility has been a huge thing, and we've seen, like, I mean, if we were more flexible at the start of the pandemic, I mean, a lot of us would have come out with a lot less cost, certainly, if nothing else. I mean, like, I mean, how much of that? I mean, so flexibility you're presenting as being a competitive advantage, and digital flexibility is a competitive advantage. I mean, that's probably even more so now. It sounds like than it was.
And decisioning, you know, yeah. read the data, make a decision and move on, and being able to react. You know, just seen it. What Thursday is going to be, you know, in terms of trusses support for utilities. How do you react to that? Do you wait and see? Do you make a call now? Again, there's a bit around processes and efficiency, but it's also about how you're set up as a business to focus.
But I suppose from a process point of view, and Michaal, coming to you, is like, we don't know what's going to happen, let's say, on Thursday. It might be a price cap for energy. It might not be. It might be something else. We need to have our processes flexible enough to be able to adopt to that, right? So, I mean, so how much of that design do you think we can build in now? Maybe not in the next week, but just looking forward as well. I mean, what's the process that? And the other question I wanted to ask you, just what's been said, is like, how do we communicate decisions that customers might not like, but based off the data is probably the right decision for them for the future? They might be able to afford a loan now, but going forward, we probably know that they probably won't be able to if you, for example, factor in energy price increases.
Yeah, I think agility has been something that we've all had to embed into our processes over the course of the last 2.5 years. A lot of it was forced in there, and I think we're learning a lot more from it. The interesting point is that from everything I'm hearing, getting this information is one thing. It's actually upskilling the colleagues when we are intercepting the customer and having those conversations, upskilling to use that data correctly, to use it in a sensitive manner, in an informative manner. You've got to remember this, pre-pandemic and pre-digital, collectors rang people to ask for money. And then we trained them to say, well, ring them to ask for what's affordable and go through the affordability. Now we're actually saying, ring them to tell them that we think that there's warning clouds on the horizon. How do you work with them? So it's one thing to get data, but when we want to invest into the human touch, it's about how do we upskill the current employees across the industries and how to actually use that data and explain it to the customer, because we will be explaining data to them that they didn't know that we already knew. So for instance, the company's house data that we bring in, the credit safe, open banking, we can build a picture using our mathematics, but the customer might not even be aware that cloud is looming. And how do we take them on that journey? And digital will get us to the point where we understand it, but deploying it will always come from the human at this moment in time.
And I suppose where there isn't that sort of almost like straight through digital journey, back to your point, Gilad, it's almost like in the back office, how do you provide the tools and the information to people to have a conversation that is actually important, probably for less cost, and they're informed to be able to have that communication with customers to a certain extent.
And if I could just say to that, I think one thing that's very important is understanding the experience that frontline colleagues have. So a piece of work we recently did at the London Standards Board was around life experience. We know that frontline colleagues may or may not be able to relate to the difficulties that their customers are experiencing, and that will be dictated by their own life experience. So I think one thing that we see as being certainly good practice is being aware of that and training frontline colleagues to bridge any gaps in their life experience and their ability to recognise and understand the impacts of the cost of living crisis. I think that will be especially important when we talk about all the different various types of lending that occur and the different customers that come with that.
Yeah. So that's a good point. And I suppose, Louise, one question I was going to come to you and ask a little bit was around inclusive design. I mean, we sort of start to see that coming up, and that's, is that at odds, do you think, with some of the digital, or particularly some of the purely digital plays versus not, or is there a way of sort of like reconciling that by, within the industry? I mean, what's your role for your view on the role of inclusive design, particularly for non-digital savvy people?
Yeah, so I think, inclusivity is obviously incredibly important. We can't leave any customers behind, but it doesn't mean that we don't use data, and it doesn't mean that we don't use digital services, does it? I mean, it could be that we use the data, so we use digital processes and we use data to understand the needs of our customers, and then we diversify on what we can offer. So we might decide to have a digital offering, but the alternative for human interaction should a customer need it. It goes back to that point for me, which is I don't think it's digital versus non-digital. It's about knowing what the customers specifically need and blending the two together. And I think our data can give us a lot of insight into what those needs are.
Okay, that's a good point. And so we talk a lot about digital automation, and we talk a lot about data. But I suppose what else is out there on the horizon? I mean, a lot of things seem to have got subsumed at the moment with, I suppose, energy discussions and all sorts of things. But I mean, certainly BNPL we've talked about elsewhere. Gilad, I know in the early discussion we talked about crypto stuff, which is sort of like, certainly with the Bitcoin price has sort of like disappeared from the conversation, but it's still there in the background. I mean, have we sort of seen almost like peaks, almost like in that learning curve and that change curve, where we're going to start to see them increasing? I mean, there's other fundamental digital technologies out there that maybe we should still have on our radar screen.
So first of all, I think that in terms of inclusion, I think I will see more and more high street banks, fintechs partnerships, so that those fintechs and alternative lenders can expand their risk appetite or the incumbent bank's experience through those fintechs and alternative lenders. So if we look at a business like Pagaya in the States that are doing something really interesting, so we'll see more and more such partnerships where basically the high street banks will outsource the long tail of customers that they cannot serve because they are limited in terms of the risk appetite or for any other reason. I think that, again, BNPL, as we understand it, I think is pretty much done. I think that many people will struggle with my statement, but again, I think that as 40% of the BNPL customers already defaulted in the first 3 months, right? So something like that. Like it's a significant number of customers that cannot afford it, and the regulators, I think, focus on it and application of affordability requirements and so on. So I think that BNPL will be aligned with the rest of the industry, right? It was just a temporary, I think, misunderstanding that is, I think regulators are now fixing. But if you think about it, most credit products are BNPL, right? Because you buy now and you pay later. It doesn't matter if I'm buying a car, a house, or a shirt. And I think that now we need to think about embedded finance. So embedded finance is definitely the next area of focus, okay? Because, and again, technology is doing something really interesting, right? Because if we think about how this industry used to work until even recent years, right? So I wanted a loan, I would go to the branch. I usually wait for an hour more than I should to meet the branch manager, and then if he likes my face, I will get a loan, and if not, I won't, right? And those days are over, right? Today, we as an industry need to go to the customer. We be where the customer is because customers do expect it. Consumers, SMEs, mid-market businesses, and so on, and because technology enables it, right? So that's I think the next probably area of focus for I think mainstream lenders. DeFi, in my mind, is certainly the end state. So I think that DeFi will resolve all the pain points we have in the industry once and for all, but it will take years because ultimately it comes down to regulation. And regulators still need to wrap their head around what to do with this DeFi thing, right? That is just inevitable, but it's pretty dangerous in its current state.
It took a long time to get to buy now, pay later, I mean, which is a lot simpler than DeFi.
Yes, but it's happening, right?
Yeah, I mean, Lucas, you were sort of nodding through some of that. I mean, what do you think are some of the next developments that maybe are under the radar that we've got to think about in terms of digital lending? Because we tend to get focused on one or two topics, right? And it's kind of like there are usually these things that are happening under the radar that, to an earlier point, is like we've got to think about those now to be ready in 5 years' time.
Yeah, I mean, like open banking it feels like it's very recent, but as part of the credit. Current account market study over 10 years ago or something. So it's been a long time coming in terms of that lament through some of that implementation. I mean, I think in terms of innovation, looking to buy now, pay later, if you park regulatory arbitrage, responsible lending, and look at it through a customer lens of a proposition, there's a lot of lessons that banking can, financial services and lenders should take, which is it created and packaged an incredibly effective way of facilitating credit. And so I do think, to Gilad's point, like embedded finance is a really interesting topic that lots of people are looking at. I think as part of that, and again, Gilad mentioned it, alliances for new providers, whether that be finding distribution partners. We have done that with Asda. There's huge opportunities in terms of how you collaborate and work with a non-financial services bank brand or with a financial services brand to talk about customers. And I think there's a lot of space in there where there's innovation. So yeah, I think there's a lot of tools that businesses can use to deploy. It does come down to just thinking about what the customer needs and developing sympathetically around that. And that's what I come back to the thing that's really exciting for us is creating unique experiences for customers under an umbrella of a proposition. And you can do that with the right digital foundations and sort of creating those one-to-one experiences. That's really exciting, I think, for consumers as well as businesses.
Yeah, I mean, and there are a couple of questions that just come through now, just around, one is we didn't talk much about AI or machine learning. I know we talked a lot about data, just if there are any comments on that. And then the question, maybe I'll direct this to you, Michaal, which is how integrated do you think open banking can be across the credit cycle? I mean, is that we still got further that we can go with that? I mean, particularly from an ops point of view. Maybe just comment on that, and then maybe if you guys want to comment a little bit on the ML piece. I think we kind of covered it, though, to be honest. But
I think on the open banking piece, definitely, it's as people apply for finance, they get the house in order because that's what they're about to do. I think it's the after the effect, and we spoke about it previously, Gilad and myself. It's after the effect, and can we use open banking data for two things? Number one, to help the customer, for the warning signs that are coming, and number two as well, for business generation. Is there an opportunity to use that to work with the customer? Are they on the right product? Is there something that we can do? So open banking, really, in an ideal world, and we predominantly in short-term finance, open banking would give us a window into if that customer can achieve the exit strategy of refinance that they want to. So it's not always just about doing the finance with yourself. It's about what is the end goal for that customer, and is the banking records at this moment in time going to enable them to be able to pay your loan or move off or continue the payments or refinance elsewhere. It gives you that understanding of the customer's performance post to know that they're going to achieve what they set out to achieve from the beginning. Certainly in bridging finance, if we lend some money to a customer to refurbish a property for them to exit via a buy-to-let loan, open banking throughout that piece would enable us to know that that customer has got a good chance of achieving that refinance at the end and exiting onto a better rate and a better product elsewhere. So for me, ideally, a customer, we'd have access to their open banking throughout the application, throughout the life cycle.
And I suppose it comes back to, I was going to bring Louise in there a little bit around sort of, I suppose that comes back to some of the consumer duty piece as well. Like, are you helping customers meet their financial goals, right? So I mean, maybe Louise comment on that in terms of like, how do we need to start thinking about that? I mean, regulators seem to be concerned a little bit about the future. I mean, are we going to see more regulation come up? I mean, is it, and particularly as we look at cost of living crisis as well. I mean, what's your kind of view on that?
So I think the expectations on the industry are to use whatever information and tools that firms have available to them to make those assessments. So if open banking or AI allows you to get that view, then that should be used. If there is an element of human interaction needed, then that human interaction should be deployed. But I do think that, again, going back to the current economic environment, that in itself will drive the need and expectation for firms to be very agile and to be able to respond quite quickly to changes in circumstances. So I do think digital has a large role to play in that, but it comes down to what specifically do you need to know about your customers and where can you get that information from?
Okay. Well, I think we're almost at time now. Collins appeared to help us end the session, but I wanted to thank everyone for the input. As an interesting conversation. I mean, it sounds like we're not at peak digital yet. I think to answer my my question at the start, there's still a long way to go. It does feel like there's nuance and flexibility, maybe thinking about digital in a less simplistic kind of way. In terms of like how do we sort of design processes in a different way and adding data seems those are the themes that came through for me. But Gilad, Lucas, and Michaal and Louise, thank you very much for joining me. That's a fascinating conversation. Thank you.
Thank you.
Thanks, Chris. Yeah, really great. I always feel like I'm interrupting because it was flowing really well, and then you look at the time and you're like, wow, that's gone past quick. But there was so much in there, and there's probably so much more we could have covered. But really interesting stuff. So thank you for that. Yes, unfortunately we have to finish now, because we've got a next session coming up at 1 o'clock, and that is going to look at regulations impact on lending. We're almost covering that then. So but obviously like to just round up and say this session is being recorded. So if anybody wants to view it back at some point, that'd be really good. and you want to get into more insight from that. But join us at the next session. There's a link into the on the left-hand side where you can sign up for the next session if you haven't already. But I'll round up by saying a big thanks to Chris Warburton, obviously, for chairing that session. He'll join me shortly on the next one. And obviously, say a big thanks to Gilad, Michaal and Lucas, and obviously Louise soldiering on the phone as well for their input. Excellent. Thanks a lot, everybody, for the session, and we hope to see you all soon at a future broadcast. Thanks a lot. Cheers. Bye-bye.
Yes.